Most traders spend 8 hours a day on the charts, all for it to not even make any money. I got into day trading for a simple reason. I wanted to be free. I wanted to do whatever I wanted with my time. So I built a simple approach that I can make money, multiple thousands a day and multiple six figures a year, a month, all with a simple strategy. I'll be breaking down today how I call my trade and how I use my simple strategy to trade with less than 1 hour a day. Now, don't get me wrong, it doesn't mean you cannot put in the work, you don't gotta put in the time to bake test and actually learn the strategy. But once you master it, once you master your emotions and risk management, you'll be able to make a really good income trading with only 1 hour a day. Now let's dive into the charts. The first thing is I only trade the NASDAQ. And on the right side, I keep the S&P 500. One of the confluences I look for is called an SMT divergence or a divergence, which is a divergence between two correlated assets. In this case, it's the NQ and the S. So every time I get on the charts, I don't have to waste my time scanning through a million stocks, looking at different scanners that I'm buying, trying to chase a move. When I know this too will always give me a move, will always give me an opportunity, and there will be enough liquidity for me to get in and out of a trade. So every time I'm looking at the charts, this is only what I'm looking at. Then I start trading at 9:30 a.m. EST. That's the NASDAQ, the New York Stock Exchange open. And the reason why I do that, it's very simple. So I know that's when there's going to be the most volatile moments in the market with the most volume and should theoretically bring us the most opportunities. Now I jump into the 5-minute, and as usually what I'm looking for is marking out any pre-market highs or lows that were taken from the market. So as you can see, this right here was this whole session right here. From this moment to the 9:30 open right here, all of this area is our pre-market. So when I'm marking the pre-market, I want to see kind of what happened. In this case, we got this big dump, but right quickly after that big dump, I see that price has recovered. So I will mark down this zone. This is a 5-minute bearish fair value gap that has been displaced now and closed above its potential area over retest. So I can use that for a profit target. I can use that for potentially a confluence to get in the trade and go long. Now, if you're trading 1 hour a day, you have to understand you cannot care what happens through the day. For example, today I was able to catch this huge candle down, and that was it. That was the only trade I took. So you can see the market since then has gone up almost 300 points, which is a really big move. But you would have had to stay until 2 p.m. from 9:30 a.m. to trading and catching this move. When it's not the way I trade, the way I trade is I'm here for a short time, but a really good time. So when the market opens up, I'm looking at what's going on in the first few minutes. So from the 5-minute, I was zoom into the 1 minute. It was a 1 minute will give me more data. Since each 5-minute will take 5 minutes to close. So you can see this was our 9:30 open right here, and at 9:31 we have a massive candle up. This massive candle up shoots up with NASDAQ, and guess what, also shoots up with the S. Now on this candle, a massive candle up, I am keeping an eye on this yellow dotted line right here. This is the previous day closing price. This means that the previous daily candle is where it closed, which was right here at 836.50. So that usually tends to be a magnet for the market to head towards and use it as a rejection point or as a potential area to reverse from. So when I went into the market, I was looking, hey, we just built a really big fair value gap in the form of essentially a void. A void is a fair value gap that's really, really large for that time frame. So in this case, for this 1 minute time frame, is a really large fair value gap. And I'm thinking in my head, since we had two, we also had this one right here, a really, really small one, thinking, hey, once we start ranging here, we're bouncing between the previous day closing price and the small fair value gap. So one of my two options is either we're going to continue this trend and trade this breakout and continuation type of move, or we're going to close under this and come down for a new session low and tap into that larger 5-minute fair value gap that we were looking at earlier, right? So this is why I marked this area out from earlier from the pre-market, because it gives me a target during the market hours. So as price starts shopping around, I'm keeping always a close eye on the partner asset of Q, which is yes, right? Yes, I'm looking at what has yes done, what is yes doing and Q hasn't done. So when we had this push higher, I'm looking at this high right here from the previous day or the overnight session, this 1920 high. So when we got this is a larger time frame high. I can zoom out to the 5-minute, 15-minute to look at this. I see that NQ did not take it out, wasn't able to get to it while ES did. Telling me there's a bearish divergence building, a bearish SMT. So I'm building a plan on how I'm going to attack this, how I'm going to take this trade based on all the data and everything the market is giving me. So I'm rejecting off of the previous day closing price. I just got one bearish SMT on NQ and ES. And if this candle closes below this rally gap, I know I'm going to want to fill this opening candle and tap back lower here if there's going to be a bounce later in the day. Now, on top of everything I just mentioned to you, I also get another SMT here. So as you can see, we have, this is the highest point during the opening range that NQ was at. At the same time, if we go on ES, you see ES on this pump right here, this push right here, breaks that same candle high. So that high that NQ had, ES is able to break above. And while NQ does not. So this right here gives me another divergence. So not only I got that larger time frame divergence, now I'm getting smaller time frame divergence. And what do we want to do? We want to combine the higher time frames to the lower time frames to coincide together to form our plan. So now, rejecting of the previous day closing price, higher time frame SMT, lower time frame SMT, all I'm missing is an entry trigger. The entry trigger will come one of two forms, which is this bearish IFVG here, inversion for value gap. As we can see here, it is really tight for value gap, and this is what we're bouncing on, but we finally give it up. And I entered this before the candle closes. You're supposed to wait for the candle close, but I thought the move would be aggressive. I thought the move would be strong because yes, started to sell at the same time off of that high that I had marked out. So I entered short. I set my stop loss above the latest high, which was right here, and I target all the way down here to this new low. As you can see, this is a perfect trade. 2-3 minutes, and you hit over 60 points as we were actually able to hold a little more. So we hit almost 70 points within 2 to 3 minutes, which putting into perspective, every NQ point is $20. So somebody do some quick math, you can see within 3 minutes you can make a few $1,000s. And then what happens next, you don't have to care about. What I really preach to beginner traders, if you're trying to make this a career, it's all about finding a trade setup that fits your system. It's not about predicting where the market is going. I don't care how much this can go higher, how much you went lower. Did the market show me something that fits my system that I can take a trade based on and execute on it? If the answer is yes, then I will take that trade. If the answer is no, I'm not taking that trade. And I'm not going in with a bias. I wasn't only bearish because I'm waiting for the market to tell me everything. If the market has simply held this level, broken the SMT, broken the previous day closing price, and have some kind of confirmation in the form of a bullish gap, I would have taken the long up here. I wouldn't have shorted. I wasn't into the market looking to short right when we open. I just looked at the data points. I just looked at all my confluences, and they're all indicating shorting, and then I'm going to take the short. And then guess what happened right after? Right after we hit this level that I had marked on the pre-market, we inversed this gap, formed a golden pocket retracement here, with an SMT, guys, another SMT off of the lows. If you look here, we have these huge lows here, these two lows here. This is an SMT because NQ does not make a new low. Sorry, ES does not make a new low, while NQ does. Golden pocket, 10 a.m. reversal. And I called this out in my alert room. I called it out in my stream. I said, this will be a really good long. Take the long here. You can target for those SMTs that we left behind now that they should be taken out. And as you can see, you could call this humongous winner. And all of this was done before 10 a.m. Because this was right at 10 a.m. We were done trading. We sat down at 9:30 a.m. and by 10:05 a.m. we were done. Really, our trading only came within less than 5 minutes. This is the why it's so powerful to learn how to trade, why it's so powerful that anybody in the world can do this. And if you want to learn from me one-on-one and become one of my students that I work with directly and scale to $10,000 a month within 90 days, hit that link down below. I'll be the first link in the description. As always, I hope you learned something. If you did, subscribe below, and I'll see you guys in the next video.